And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery. We represented thousands of community associations and business owners in the placement of insurance and the recovery of loss for more than a decade. In fact, we're in our 11th year here, the year of steel. And we continue the fight on the front lines for consumers, for policyholders that are dealing with either placing insurance in this hard market or recovering from loss. And with all the information out there, it is confusing, it's a difficult market, and sadly, in states like Florida, it's becoming more and more anti-consumer, anti-business, and rather anti-American. And we want to and hope that these things change and the pendulum swing, and I think recent reporting may just do that. Now, we have seen a slide in legislative initiatives, which has come up with some legislation to hold the insurance companies more accountable. But is it enough? I would say absolutely not, particularly in the wake of this one-way attorney's fees legislation, the rampant and aggressive attack on assignment of benefits, as well as the public adjusting industry. Effectively, anyone that may have the same interest as the insured has been picked as the reason for the issues that are plaguing the Florida insurance market. But this recent report sheds a new light on many issues that you may have heard me talk about here on the Recovery Report Live. But not only just me, but many of the others at GlobalPro, whether through interviews or just sessions where we're breaking down legislative initiatives, information, facts, real facts that are hurting our industry here in Florida. And the reality of it is that this article that was recently published in the Insurance Journal goes into great detail and tries to provide a balanced story as it relates to this new findings, these new reports that are coming out about what really is causing these insolvencies and potentially this hard market. Now, the funny thing to note is that this author makes a point to state that there are a head-scratching, as he puts it, head-scratching moments when reading these reports because, as we have found, it makes no mention of litigation issues plaguing the insurance market. But before I get there and talk about some of the commentary that follows this article, and I want to point out that many of the comments are made by individuals that won't even use their name, but those that did, which there's really only one, is an advocate for the policyholder. It's not a wolf in sheep's clothing. No, this individual wants you to know who he is and what he stands for and what he's saying. Unlike the FL analyst that conjures up these issues regarding litigation, claiming that, well, all the reasons for the insolvency that are mentioned in the report, which does not mention litigation as an issue, are caused by litigation. All right, but before we get there, I want to give a little bit of a history lesson because in so many broadcasts, I have just dove into the issues with the statistics and the information that is being proffered as fact, but unsubstantiated, and therefore, in my eyes, fiction, not true. I don't believe these things to be true. I've called on many people to say, hey, come on our show, talk about these real issues. Let's see what you have to substantiate your viewpoint on these things. Show us how it is the litigation and the minority of the claims that are made, which are actually represented by public adjusters or where a contractor is involved, how it directly relates to the issues that are plaguing our market here. And it's not. This is very interesting managing general agency issue that we have here, something unlike any other industry in any other state in the U.S. It's very unique the way that insurance is transacted in Florida. But again, I want to stay focused on really what at the crux or issue in this article because I think that really needs to be exposed. It really needs to be talked about. And again, a little bit of history lesson. Let's talk about 2010 to 2012. We have public adjusting laws that get enacted. There's preferential treatment for citizens. There was a time and period where there was a moratorium on public adjusters getting hired by policyholders for citizens at the onset of a loss. Now, why was this important is that during this period of time, most policies sold in the state of Florida were with citizens, and we're talking about homeowners. And there's a moratorium on public adjusters being able to do it. Again, there is a minority of claims filed in the state of Florida are actually represented. That is true to this day. Okay, but citizens took an initiative. They wanted a moratorium. Not only did they want that, they wanted fee caps, and many other industries pushed for this, anti-solicitation, et cetera, et cetera. Now, total revamp of the PA laws. There was an issue regarding sinkholes at the time, but I don't want to get distracted by that because, again, I want to focus on this article. There was a lack of storm. There wasn't storms for like 13 years. We were in a soft market. There was this report. It's called OPPAGA 10-06. I've mentioned it many times on these broadcasts. What it found is that with the representation or through representation of a public adjuster, from the storm seasons, from the 2008 and 2009 claims that they investigated, mostly related to hurricanes from the 2007 storm season, which is Wilma and Katrina, what they found with representation, you get 500 to 700% more than if you did it on your own. So with representation, with licensed individuals that are trained, that understand the claims process, you're going to get 500 to 700% more than those that don't. Probably a lot of reason why Citizens was pushing to make sure that public adjusters could not represent you at the onset of a loss. And again, an important part of this report was that this is where a public adjuster was hired at the onset of a loss, and they compared those to where a policyholder did not have representation. And what it found is 500 to 700% more. The other thing is that they found is that there was a marginal difference or an increase in time with a public adjuster compared to those claims that did not have representation. But it was a marginal amount. It was a couple weeks, I would argue. But I also have to take a step back and think to myself going, okay, I'm getting 500, 700% more. It's probably going to take a little bit more time to negotiate those things. Or is it that the insurance companies are treating those claims differently? And it was found with some insurance companies in and around this time that they were, in fact, treating it differently. In fact, one insurance company, if you had a public adjuster, would immediately shove it over to what they call as a special investigation unit, SIU, and they would treat these claims differently. They would do this massive investigation, recorded statements. They would ask for multiple inspections. That would take more time. However, still, with the representation at the onset of a loss, 500 or 700% more, it's going to take a couple weeks. Sign me up. I'm there. I don't think any policyholder would argue with that. It wasn't that they were doing something wrong. In fact, historically, if you look at it, the issues of fraud is mostly with insurance agents. It has most nothing to do with claims professionals, generally speaking, and very few of those has anything to do with a public adjuster. And most often, it's the unlicensing practice of public adjusting that lands themselves in an issue of fraud. Why do they call it unlicensed public adjusting? Well, because it's a flashy title. It's somewhat associated with public adjusting, but again, unlicensed, meaning they are not public adjusters. And that sometimes, a minority of the issues is there. But again, history lesson here, the state of Florida gets sued when they enact laws, these laws I just talked about. They get sued for enacting these laws, and on July 5th, 2012, on July 5th, 2012, it's ruled unconstitutional. And they roll back a lot of these public adjusting laws. It has to do with free speech, our right to transact business. They attack these things. This 48-hour moratorium on claims where within the first 48 hours you can get hired by public adjusters, generally speaking. All these things start to get rolled back. Public adjusters fought it. They sued the state of Florida. They sued the CFO at the time, and they won. They won at the appellate level. They won at the Supreme Court level. It was ruled unconstitutional. And then fast forward, that's 2012. Now we're in 2017. We have a very active storm season. We have Irma, Harvey, Maria all hit. We end up in a pandemic, and we're in a hard market as we come out of this pandemic. And at that time, many insurance companies came out and said, our business policies don't cover for this type of loss, despite the fact that even our president at the time mentioned that he was unaware of any business policy that he had seen that mentioned any sort of limitation or exclusion for a pandemic-related loss. Again, most policies, when we got done reviewing and inspecting, hundreds of policies that came flooding through our doors here. I would actually argue over 1,000 policies came through our doors here at GlobalPro, and we investigated this. We found very few. I literally can count on one hand how many mentioned really anything to do with income-related losses related to pandemics, even virus. In fact, we found several policies that actually included coverage for that, and the insurance companies still fought it. So we're dealing with those things. We're in a hard market. And then 2021, 2022, there's aggressive legislation to clamp down on assignment of benefits and attorney's fees, all right? We beat up the public adjusters for a year. Now we're going to attack the attorneys. We're going to attack the contractors. They first started with the contractors. They passed this aggressive legislation as part of this revamped insurance legislation, 2D40. We had in the wake of the Surfside issues, they start attacking the insurance market issues. And of course, they start with consumer advocates. They blame consumer advocates for everything. If rampant litigation, public adjusters, contractors. I mean, they're alleging the litigation is the cause of issues plaguing the market. These are somewhat quotes from many of the pundits pushing for legislative changes to clamp down on consumer advocates yet again. Now remember, again, let's rewind 2010 through 2012. There is a report out there that shows the effectiveness of public adjusters, why it's necessary for a consumer, a policyholder, to hire someone to make sure they get the full benefits of what they're entitled to at the onset of a loss. It's proven. There's facts to support this. Takes a little bit longer, but you're going to get everything you're entitled to. Who's not going to take that deal? Oh, well, let's pass a bunch of legislation to make sure that you can't hire these people because you're going to get everything you're entitled to. There was no rampant fraud or issues spoken of in this report. In fact, they point to very little issues of anything going on throughout the years after this report was published, right? And here we are, more aggressive anti-consumer legislation. They attack AOB issues. They attack attorneys. One of the things that's not really mentioned much is this, where insurance companies were suing other insurance companies through subrogation, and they really attacked this issue, but buried it. Okay, they attacked this issue where a homeowner has a HO6 policy in a condo association, suffers damages from a water loss that may originate in another unit in their common area, and this insurance companies would pay the claim and then turn around and immediately attack the association, most often using their in-house legal team. A lot of the tactics were just to simply file a lawsuit because they knew they would get something back because it was cheaper to pay them than it was to fight the lawsuit itself, even if the lawsuit was brought without merit. That issue was there. Insurance companies attacking insurance companies. Let's drill down on those statistics and let's evaluate how much of that was going on. And I can tell you right now, because a big core of our business is representing community associations, it was rampant. Almost every single water loss that we saw in most all community associations we represented, there was some insurance companies within the building doing it. I personally cannot think of a claim where it didn't happen. I'm sure there are several out there, so I'm not going to make an absolute statement about it. But this was an issue. There was no proof of it. In fact, sometimes we even knew which contractor caused the issue. And they went right past that to the association saying, well, the association let them onto the property. But we had the copy of the policy for the contractor. Why not make the claim against them? In fact, most often we would provide it to all the unit owners as part of records requests or just voluntarily distribute it. We would advise the associations to do it, and they still did it. All right, so it's a really important issue that doesn't get spoken about, but it's all mixed in there and was happening at that same time. Now, at the end of 2022, we have Hurricane Ian hits. Now, this is kind of, I think, the train had come off the tracks already with regards to the initiatives of the new CFO and the governor and many of the pundits and the lobbyists of the insurance companies. There was so much information out there that they were throwing around that was not supported by actual data and facts. And when asked for this data and fact by some of your senators and House of Representatives following the earlier session that same year, they asked for this information saying, hey, in the prior session, the insurance companies were supposed to provide this data. And they said, well, we read that differently. We think it's owed next year, 2023. So we don't have the real data. We don't have the information. We're not sure where it's coming from. We don't have a true breakdown of issues going on. And again, it is the opinion of the insurance industry largely that it is the aggressive solicitation and marketing tactics of attorneys and public adjusters and contractors that leads to the litigation and not the practices of the insurance companies. And that's where I want to go next, okay? Because the CFO comes out and in an interview and accuses public adjusters and contractors of predatory practices. In fact, calls them predators and locusts at a press conference, right? Because it's Hurricane Ian. There's an argument that PA fees are exorbitant, and that's what's going to drive up the cost of claims because they're incentivized to inflate estimates. Again, unfounded accusations. Because what comes out following that 2022 session, leading into the 2023 session, is that there is research done which finds, and I want to actually state the numbers here. So from September 2017 to November 2022, there were over 105,000 complaints filed against insurance companies. Okay, while complaints against public adjusters numbered in just 99. Okay, now Citizens is largely immune to bad faith, granted. Okay, there was a Valued Penguin report that investigated, complaints by consumers related to property insurance. And what they found is that 68% of insureds complained about the claims process and settlement. Okay. Now remember, they were saying that it's the aggressive solicitation and marketing tactics of attorneys, public adjusters, and contractors that was leading to the litigation, how they were incentivized, the commissions, the assignment of benefits. That was causing the attorneys' fees, that were owed to attorneys for winning a lawsuit, on behalf of a policyholder that was not paid properly. They're saying that it was the incentives for a public adjuster working a contingency fee, it was the assignment of benefits, it was the attorneys fees that was leading to the increased litigation. But there's 105,000 complaints filed against insurance companies, 2017 to 2022. I told you about 2017, right? 2017 was probably one of the most active storm seasons where you had actual storms hitting major populated areas. You had Harvey that went into Texas. You had Irma that hit largely, I would just call it Florida. You had Maria that absolutely devastated Puerto Rico and the Caribbean, right? So from 2017 to 2022, 105,000 complaints against 99 against public adjusters. I mean, that's nothing, You had 68% of insureds complaining about, the 68% of the complaints about insurance companies was mostly about claims process and settlements. In fact, the top four reason for complaint all has to do with dissatisfaction with the claims process and actual payment of a claim, right? And again, this data that the insurance companies claimed was out there that proved the reasons as to why this legislation was necessary in the early 2022 and the later 2022 session going into 2023 wasn't produced, wasn't given. And you've had the CFO and the OIR and the governor and many others pointing to the percentage quantity of litigation, but there's no actual substantive breakdown as to how many of those cases actually prevailed on issues that were caused by insurance companies' refusal to actually pay because of the complaints by consumers about the processes, about the failures in those processes. In fact, I would actually argue that the legislator and the governors have actually acknowledged it at this point because they've recently passed an accountability law which makes them publish their claims manual. That didn't happen, though, until just recently. New Senate Bill 7502, I believe it is, which is an insurer accountability law that makes them produce their actual claims manual. Put the facts together here, ladies and gentlemen. Let's line these things up. Let's continue our history lesson here, all right? So we came out of the pandemic, really hard market. We have the 2021 to 2022 aggressive legislative session. At the end of 2022, we have Hurricane Ian. And on September 29th, 2022, the CFO calls PAs, contractors, locusts, and predators, argues PA fees are exorbitant. And then beginning of 2023, more insurance laws, right? And then on March 11th, 2023, Heritage is accused of fraud by their own insurance adjusters. They're called independent adjusters that are there on behalf of their insurance company. They represent their interests in the field, write estimates, submit them back to the insurance company, and the allegation is that those reports were changed in payment, and there's a mountain of facts showing that there was definitely changes made. The state of Florida launches an investigation, allegedly. Of course, we don't have any data or information on that. I think that the facts and information that were already produced as part of the lawsuit speak for themselves. There's, without a doubt, a lot of questions that need answering here. There is a rampant amount of policyholders complaining about it. In fact, there was an interview of the new appointed OIR representative, Michael Jaworski. He's interviewed about these complaints, and he chalks it up to and I'm summarizing my opinion. It seems like he's chalking it up to people not understanding coverage and the difference between hurricane and flood losses. Well, the thing is, boots on the ground, you're down there looking at these things. I can assure you that's not the number one reason, nor is it the only reason for it. We've attended the town hall meetings that continue to occur in the immediately impacted area, Fort Myers Beach, et cetera, to talk about these things. In fact, that issue seldom even comes up at these town hall meetings. So again, it's unclear as to where he derives his opinion on this situation, and why he thinks it's that, when that seems to be like an issue that, I mean, honestly, I've been hearing about it since like early 2000s as it relates to different hurricanes that have occurred. And it seems to be an issue that has been so well popularized that there's been so much research and information out there about it. I can't possibly see how that's the reason why, statistically speaking, the enormous amount of claims, statistically speaking, that were immediately closed after the hurricane with no payment versus any other prior storm. It was insane. It's totally insane and honestly off the charts relative to any other claim. And to say that, it was a very wet storm and it was more flood than it was wind, this is a near Category 5 hitting a very populated area. I honestly am flabbergasted. I don't understand this. We saw a lot of that Hurricane Harvey, but that, paled in comparison to what the strength of the actual wind and storm activity that was going around Hurricane Ian. And again, we don't even have confirmation whether it's a 4 or 5. And a lot of meteorologists that I've spoken to, and one which we've obtained reports from, are leaning towards and believe they have enough evidence to suggest that it was in fact a 5+, right? It was beyond a 5. So I scratch my head at it, but his appointment, again, Heritage is accused on March 11th, 2023, and then on May 3rd, 2023, info about insurers' donors to DeSantis comes out related to his presidential campaign. The majority of the money that had been put up at that point was from insurance companies, okay, through, I believe it was a PAC that they had there. And DeSantis appoints the commissioner of a new commissioner, as I spoke of, the Office of Insurance Regulation. And you dive into his background. I mentioned some of his statements after Hurricane Ian. If you dive into his background a little bit, he's a lawyer with the Florida State, my alma mater. That's great. Served as legal counsel at the Georgia Insurance and Safety Fire Commission, and then was chief of staff of the Florida Department of Business Regulation, and then was chief of staff for the Florida Office of Insurance Regulation from 2017 to 2021. Now, if you remember what I said about 2017 to 2021, during 2017 to 2021, from September 2017 to November 2022, there were over 105,000 complaints against insurance carriers in Florida and only 99 against public adjusters. Okay? When he was chief of staff of the OIR. Now, his time in Georgia is interesting because if you've ever adjusted or had a loss, let me say, if you've ever had a loss in Georgia, or if you've ever adjusted a claim in Georgia as a public adjuster for a property owner or a business owner, maybe a property owner as well, you'll know that the environment there is very difficult. It's not friendly to an insured. It's the courts are not in favor of the policyholder in a large part from our experience. It's a very difficult market. It's very, very difficult. And again, he spent a lot of time there. And then during his same time that he was the chief of staff for the Office of Insurance Regulation, 105,000 complaints. 105,000 complaints. All right. During which time the market fell into this crisis. Okay. So now again, this is a history lesson leading up to a breakdown of this recent report, the R&L report, which we will talk about in a minute here, and the findings of this journalist in this article from the Insurance Journal. Now, I will tell you, a majority of the articles I read in the Insurance Journal are written by industry, pro-industry individuals that spend a lot of time with insurance companies writing articles. But there are many articles, which I have had myself, from the consumer perspective. I really, truly believe that this was a balanced article, and I'll get to that in a second here. All right, because I want to kind of continue running through these things. I think you can see where I'm going here, right? Middle of 2023. So we have July 26th, 2023. An article points to other issues, not lawsuits, as the reason for issues with insurers. Now, I'm getting to the article now, but I want to state this though. There was many other things happening as well during that same time. You had the legislation that passed on the one-way attorney's fees. You have this new matrix regarding whether an insurance company owes you a percentage or a portion of your roof. It ignores well-founded and well-established engineering construction principles and substitutes it for the opinions of an insurance companies and their lobbyists as it relates to what they should owe you if your roof gets damaged. It also gives the insurance companies yet another compliance period before you can actually sue them. You have to tell them, hey, I'm going to sue you. But you have another 30 days or so to adjust the claim or ask for more post-loss compliance or whatever it may be. There's more and more opportunity there. It requires the public adjuster to produce an estimate in a very limited amount of time, while it gives the insurance companies more extended period of time to do the same thing, to offer coverage and make a payment. A public adjuster has a third of the time that an insurance company has to make a determination as to what your damages are, what they owe you for, and how and when they're going to pay you. All right? And remember, again, the data for public adjusters is that there's very few complaints filed against them, and if you hire them at the onset, you're going to receive over 500 to 700% more. All right? There's no actual, they talk about, these aggressive marketing tactics and everything else. Again, a minority of claims are actually represented by public adjusters or even attorneys in lawsuits. And now many of those lawsuits that are actually filed by consumer advocates, by attorneys, we have found have been successful in proving that insurance company did something wrong, and therefore they then owe attorneys fees. In fact, some of the statements I've actually heard from some legislators as well as some of the other officials, elected officials at the state, talk about claims where there was a jury verdict and then fees awarded, and they can't believe the size of the attorney's fees that were awarded. And it's like, well, you would not have gotten there if they had not been able to prove to a jury, to our peers, that the insurance company didn't do what they were supposed to do, and then you're owed to it. Why should I have to pay to sue you to prove that you did something wrong and didn't comply with the contract you wrote? Many of you out there listening to this, think about it. When was the last time you reviewed your insurance policy, made edits to it, sent it back and say, hey, I like this provision better. Can we add this one in here? You didn't do that. You bought what your broker produced to you as your options. You pick one. You most often never even saw the policy. You just saw some pricing spreadsheet on how they got to the number that you owe, which included their commission to owe to the broker, which, by the way, works for an agency that may actually have some fee-sharing relationship there on the loss run ratios where they get bonus based on the performance of profitability of the products that are being sold, et cetera, et cetera, et cetera. You see where I'm going? Down this rabbit hole of who's really being incentivized here. Is it the insurance companies that are protecting the profitability of their companies and the shareholders, or is it the consumers that are diving into your situation, analyzing your policy, looking for what you may be owed, and making sure you get all of it, not part of it, all of it, like the OPPAGA report shows, 500 to 700% more with representation. All right? So now this is what I find interesting. This is an article, and we're at the article here. I gave you the history lesson. The Florida Department of Financial Services Division of Rehabilitation and Liquidation. And it's being referred to as the R&L report. All right. On page 7, it lists factors contributing to insolvency. All right, we've heard what the legislators and the proponents of all this anti-consumer legislation, I would call it anti-consumer, anti-business, anti-American. Why? Many of these companies either move their money offshore or are foreign entities that we deal with here in Florida. Very few of them are actually admitted insurers that we see, particularly in the South Florida region. Again, where you have, I would call I-4 South corridor. Again, even your admitted insurers that are selling here, because this managing general agency situation, much of this is moved offshore. It's something that's not talked a lot about. But again, there was actually an investigation launched into it. I have dug all over the internet to try to find real information about it. If someone has it, please produce it to me, because what I'm finding is just bits and pieces of stuff. I would love to see the results of that investigation. All right. So the 7 factors on page 7, it lists factors contributing to insolvency, and the author notes that none of them list litigation as the issue. It says inadequate capitalization or asset deterioration, improper management, insufficient claim reserves, rapid premium growth, inappropriate transactions with affiliates or subsidiaries, inadequate premium rates, natural disasters or catastrophe losses, change in business conditions, reinsurance market issues. All right. The Arnell report isn't the only regulatory document that doesn't emphasize litigation as a driving force. All right, it's not, and that's where I feel that this is balanced reporting, because the actual reporter included quotes and statements and cited to information that has been produced by those that are in favor of all this anti-consumer stuff, but continued to do investigation into it and looked into the reports on these insolvencies, okay? And the funny thing is that if you go to the several, okay, so in the Fed National and for Weston claims, lawsuits, litigation, and attorney's fees were not listed, okay? Now, FedNat and Weston, again, ruled insolvent. Claim lawsuits, litigation, attorney's fees, not listed, okay? Actually, we'll go direct quote on page 7 of the FedNat report. Despite significant capital infusion in 2020 and 2021, FNIC's surplus as regarding to policyholders continued to decline. Additional factors include poor operational results, limited access to additional capital, and a jeopardized financial stability rating. For Weston, says, the company had insufficient assets or reinsurance to pay potential claims to policyholders during the 2022-2023 Atlantic season. Despite actions taken by Weston to improve its financial condition, including a capital management plan and risk-based capital plan, Weston's surplus as regards policyholders continue to deteriorate, ultimately led to the company's referral for delinquency proceedings. 2 other insurance companies, United and Southern Federal's delinquency proceedings lawsuits were named as one contributor. All right, UPCICS losses over multiple years affected its surplus. The large percentage of litigated claims drove up its cost. The $140 million reserve deficiencies related to Hurricane Ian in September 2020 resulted in the company's deferral to the Department of Delinquencies. It only listed as one contributor of others, many others, right? So again, Southern Fidelity Insolvency Report lists AOBs as a factor, okay? One factor. But of the 4, 2 of them mention nothing. So they could have, but they don't, all right? Loss from Hurricane Ida in 2020 are projected to exceed the top of the company's catastrophe insurance. Ultimately, Southern Fidelity's failure to secure a reinsurance program in the 2022 hurricane season and the late development of reserves for Louisiana claims exhausted reinsurance surplus were resulting in the company's deferral for delinquency. Now, there, like I mentioned earlier, there was one individual who actually included their name in their comment section below this article, and I'm going to read the direct quote of what he stated because it couldn't have been any more clear, right? You had several others who went under pseudonyms like FL Analyst who don't want to be known. Be known. Tell us who you are. Explain how you think claims litigation, public adjusters, and AOBs is the factor or the factors causing the insolvency and issues that are plaguing the insurance market, when I just went through a litany of facts and information that I've tied together, and there's so much more. There's so much more I can dive into. As I started to go down certain rabbit holes and about managing your agents, et cetera, I'm staying focused on the issues that this article points out. And I'm going to read Mark Boardman's comment. Claims litigation is a driving factor for many of the listed insolvency factors, including asset deterioration, insufficient claim reserves, inadequate performance, reinsurance market issues, and changing business conditions. He is quoting one of the pundits that is in support of the legislative act, the anti-consumer, anti-business, anti-American legislation that has been plaguing this market. All right. And what he says is, he goes, now let's flip the deal. I think the factors listed are the cause of the litigation, and no one is looking to determine the percentage of cases brought by insureds where they were won by the insured. So maybe better management would allow claims to be paid instead of funds being funneled to other pockets to defend lawsuits due to the mismanagement. Interesting take. I mean, again, during the period of time that the commissioner was chief of staff for the OIR from 2017 up to 2021 and beyond, 105,000 complaints by consumers against insurance companies versus 99. Value Penguin report showing 68% of the complaints that were about insurance companies. The top 4 have to do with claim settlements and payments. I mean, these are all things that piss someone off and that erode consumer confidence as to a reason why they would hire a lawyer to sue you. Okay, these are all reasons for it. And again, where's the data information that we believed was going to be produced in 2020 that actually supports these things? Don't point to cases that were won by trial attorneys and that were rightfully awarded attorney's fees. Is it better that the consumer pay out of the money that they were otherwise owed for their damages? Or is it better that the insurance company who acted poorly or badly in bad faith should pay for that? I mean, again, you didn't write this contract. Why can't they adhere to it? And now we have an Insurance Accountability Act that requires them to produce claims manuals. I mean, come on. All right, let's put it all together. Let's connect the dots here. I'm not saying that any one individual is responsible for this, the CFO or the OIR, et cetera, et cetera. I'm simply lining up the facts and information for you to make a informed decision yourselves, to think about these things, to think about where we're headed in this market and why we're here, and how are we going to change it. What is the solution? Is the solution more anti-consumer legislation like further fee caps on public adjusting, or more ALB, or more one-way attorneys, or stripping policies of coverage? Because that's what's going on. There was a recent form approved. It's called an anti-public adjuster form. Literally says anti-public adjuster form that's being included in policy, even though you have a constitutional right to representation. This has been approved by the OIR to be used and included in policies, and insurance companies are doing it. That you have a constitutional right to it, just like you had a constitutional right, and as a public adjuster, you had a right to free speech, and you had a right to representation, as it was found when Citizens, through its lobbyists and its initiatives, pushed for laws that were enacted and then found unconstitutional several years later, all while a report was produced called the OPPAGA 10-06, which shows the effectiveness of a public adjuster. Again, there's very few sightings of fraud, all right? And there's very few public adjusters, generally speaking, relative to the amount of independent adjusters that come into the state following a major event that are not properly licensed, that don't have the experience, that are not using the proper tools, that are not doing what they're supposed to do. And when they do, we have a report that shows that the insurance company would go to great extent to change those reports and findings and pay something far less. And that's what that insurance company is being sued for. And it's another issue that's plaguing this industry. Again, there was a time that there was a soft market and there was still aggressive legislation against public adjusters and contractors and attorneys and things like that. There was a time that happened and some of those laws were repealed. There was a time that we were in a soft market because we had more than a decade with no storms. Right? Many of those same insurance companies were here during 2017 to 2022 when all these complaints were being filed. Right? Where are all those profits from all of those years? Where are the profits from now? Because there was just a recent rating on reinsurance, how it's a better market. There's a number of insurance companies are rating higher profits than ever before, right? et cetera, et cetera. I can go into I broke down the whole real estate investment market. You see a lot of insurance companies. Where do they take that premium dollar? Where do they float it? Where they make investments? Real estate market plummets. They got to make up. How do they make up for it? I mean, again, there's economics. There is a lot going on here. There's a bigger story to it than just the fact that consumer advocates are the cause or reason for it. And again, take steps to protect your interest. We're here to help you. This is a longer than typical episode where I broke down a lot of information that I have been able to collect. These are all facts and information. If there's something I may have stated that you disagree with, let me know. I'd love to hear from you. We're here to help you. We've been doing it for more than a decade. More than a decade. In fact, my family was one of those that actually sued the state of Florida first when they passed those laws. Thereafter, others did the same, and they were successful in protecting the interests of public adjusters, was protecting the interest of the consumer. So with that being said, make sure you have liked us, subscribe to the YouTube channel, and are following us all our social media channels, because we want to make sure that when we go live right here in the Griffin studio, that you get the notification. So join me next week, right here, same time, same place, on the Recovery Report Live.